Hello, traders. It's Sunday evening, June 5th. I thought I would do a market recap. I've taken a week off. My battery has been recharged. I feel ready to go. Taking a look at the market, you can say, well, you're playing Monday morning quarterback. So, of course, that's easy to go back and look at the price action and say, well, here's what I would have done. I'm going to do that. But before I even left on vacation, I said, listen, this is going to be a tough trading scenario. We are in a pre holiday condition. Look at the very first thing you can see right off the bat. Look at how light and puny the trading volume is. That's context. You're in pre holiday conditions. You don't have a lot of commitment one way or the other. You have very little market trend. So that means that you have to err on the side of caution. You have to pare back your trading size and your trading activity. Even before I left, if you check my market comments, I warned this is not going to be a high probability market environment. Now, we still have an FOMC statement coming ahead in about a week and a half. Well, we can expect a 50 basis point rate hike. No bueno. Traders are not going to like that. We've got another potential rate hike coming in July. They are going to sit back and wait. This is not a time where you're going to see asset managers swinging for the fence. They're going to be very, very cautious. So if we look back, the last day that I posted comments was on Wednesday, May 25th. On the 26th, we had a nice day. You can see we had a bullish hammer here. That's nice off of a new relative low. Okay, get a little bit of a test here. Another bullish hammer. Okay, we've established some support. In this market, when you have market support or resistance that's been established and you've spent a little bit of time there, you can expect a reversal. So same thing here. You spend a little bit of time here. Okay, we're going to test the downside. You come down, double bottom low. Okay, we're going to try the upside. Same thing here. You get some momentum downward. Now you aren't able to make any progress here and the market starts to release. But again, pre-market conditions. So you get these two nice days where the market lifts off, and then what happens? Nothing. So let's zoom in on the 5-minute action. Let's see where we could have picked up on these clues that we might have a good trading day or a mediocre one. I'm going to go into the 30-minute chart because that allows us to look at the price action on a more granular basis. And here you can see this is on May 25th, so we get a nice close here through a small resistance level. Then on the 26th, long green candle closing on its high and nice follow through. The next day, can I expect that this gap up is going to hold? No, I've got to be pretty cautious because all of these moves, especially these gaps up after a move higher, have reversed. So I would need to see some consecutive stacked green candles in order to join this move, but I would not be jumping on it first thing in the day. So let's go back and let's take a look at that market movement. Let's try and get the context for the move, and then let's see if there were some opportunities in there for us. So I'm going to zoom all the way back and we'll take a look at what the market was doing here. And I believe this is about the 25th. Actually, this is the 27th, so we'll go back 2 more days and then we'll just move forward and take a look at the market. So there you can see we had a nice move here, a little bit of a drop. This would have been Wednesday. Then we get this gap up. Nice long green candle closing on its high. That's a very good move. And look, we get follow through right in here. Stacked green candles with very little retracement. This is a gap and go formation. Now, would I have jumped on it right here? No, probably not. How about here? Probably not. By the time we get a half an hour into trading, yes, this looks pretty dang good, especially on that D1 bullish hammer that I had shown you on the daily chart. Yeah, we've got some buyers in here. Okay, so we get a nice little market move higher, then the market continues to float higher. You've got one little retracement, two little retracements. Usually you get three bull flags out of a move like that. And you can see here we start to flatten out. So you had an opportunity in here from approximately here to here. You could have taken some gains. You could have Also look for a re-entry point on a breakout to a new high of the day and caught a little bit of the move right in here. Very nice trading day. So let's move on to the next trading day, which was Friday. You can see the compression here. No reason to take overnights in this market. I've said it for a long time. In this particular instance, we did get some follow through buying. You've got a nice long green candle here and another long green candle here. Would I have been buying in here? No. Again, we're in pre-holiday mode. Keep your size small. What's the retracement here? Well, the halfway point of this long green candle holds. Nice. Then we get another lift off. So would I have pounced on this long green candle here? Probably not, but I would have noticed that yes, we're adding onto the gains, and this is probably going to be another gap and go. I may have an hour in the trading day to get my positions on. Certainly, I'm going to be focused on the long side now that I know that those gains have been preserved. We did not get a gap reversal, so everything looks pretty good in here. I would be looking for stocks with relative strength, knowing that I probably have an hour to an hour and a half to maybe enjoy the rest of that ride, and then I can expect a compression. Now we get into holiday mode. So we know that we're going to get a pre-holiday move that's going to be on light volume, and we're going to have a holiday hangover when we come back. So you can see we did have a little bit of a breakout late in the day. Could you have traded that? You could have. The volume was okay on it, looked pretty decent. You could have caught some of that move into the close on Friday. But here's what happened Monday. All of those gains were given back. So, Pete, when you come in Monday, long red candle closing on its low. Would you have been shorting there? No, I've already shown you the last 2 days before that. I am not jumping in this light volume situation to try and trade the market. It's going to be choppy. So you get this pullback here, long green candle, long green candle. I don't know that I would have been sure about this move in here. Look at how much retracement after that first long red candle. We're all over the board. Get long green candles, long red candles, long tails above body. This is a nice long green candle that almost engulfs all of these. Good sign. Am I going to be jumping into anything? No. Here we have a higher low double bottom. That looks pretty decent to me. We also have a 1OP bullish cross in here, downward sloping trend line, long green candle after a compression in here. Yeah, I think in here I could get long knowing that we've had some decent market strength recently. They tried the downside, weren't able to take it any lower, but there is some selling pressure. So all the gains that we saw from the previous week felt really, really nice, but all it took was one holiday weekend and boom, the sellers are back. So now I'm kind of thinking all these gains that we had in the last half of Friday were instantly erased. A higher low double bottom, low commitment level, find the right stocks. Yeah, there's an opportunity in here for a few hours to make some money. You can see how the market continued to go higher. And we've got resistance here. 1, 2, 3. Okay, probably going to be some buy stops right in this level here on the high, also the prior day's high. And we know that those moves will poke through. They'll get those those short traders to cover their shorts. So we get those buy stops. And then those moves are oftentimes a head fake. Can't get through. Retrace that long green candle. Now we have a long red candle. Okay, the highs are in. Going to get a little bit of a pullback. Could you have traded that? Yeah, there was probably a move in there, but not a very good one. Again, low volume. We know from this day that the sellers are still around. Took a little bit of a break. You can see, went right down on the open. So we come in the next day. We try to test that high right in here twice. Tails above body. No bueno. That tells us that the sellers are back. They're going to try the downside. Take out this small support level right in here, long red candles. Now we've got 4 long red candles stacked consecutively, one on top of the other, very little to no overlap. Yes, we're going to get some follow through. Come in here, find support, find support, find support, get a nice long green candle through that horizontal resistance level. Probably going to get a little bit of follow through on that. Decent little trade right in here. But your trade of the day, from my perspective, was after these long red candles were set right in here. That's the higher probability trade. I've said it time and time again. I don't typically trade the first half hour to 45 minutes. That is my evaluation period. That is when I get my market bearings. That's when I get a sense for the momentum one way or the other, or in some cases, the lack thereof, in which case I'm not trading much. So this is in the sweet spot of the trading day, right in here. That's in the sweet spot of the trading day. Now we're into the middle of the trading day. I trim my size, I trim my trade count. I don't expect much to happen once the highs and the lows are set and the VWAP is set. But we get a nice little opportunity in here. That's a decent long green candle. You could ride that up in here, but I wouldn't be sticking with that trade very long. Would not have traded this. This is in the last 20 minutes of trading. Really not of much interest to me. Just late day market imbalance orders. So come in the next day, try and sell off. Hey, we got some long tails under body. Nice. Long green candle, reversed immediately. So you can see that we're all over the board in this case, but we do have some support forming here. Go back just a little bit. You can see that was the prior day low. We're starting to form a nice little support level here. By the way, this support level is going to be tested. When it is tested, there are going to be some sell stops that are tested when we get down to this level. We're going to see a long candle, and then we need instant follow through, or we will know that that was just a head fake to trigger those sell stops. So come into this day. That looks pretty encouraging, but it's given back right away. Now we start climbing back. We get a few candles, get through the open of that. Okay, that's a pretty good retracement. We know we've got some support in here. Would I be buying right in here? Probably not. Low probability market. Got resistance right in here. Okay, now we're starting to break through here. We're still in the meat of the day where I consider this to be decent trading. We've stacked a bunch of green candles with little to no overlap. Very little retracement in here. Through this high, yeah, I could get long in here. You get some decent follow through. We're going to continue to go to the next day. Got a gap down. Market kind of flounders around. Can't get into this gap right in here. So it's not able to get in there. That's a sign of resistance. So we're going to test the downside a little bit. But when we do, this is a marginal new low. Well off of this low. And now all of a sudden we're starting to find support, mixed candles. Probably would not be doing a lot of trading so far in here. So we've got a chance that we might be able to take out that low. We know that we can't get in the gap, so we're showing more resistance than anything. But we'll see how the day unfolds in here. And now we start to go a little bit higher, but then we give it right back. Chop. Once I'm to this point, I mean, look at this. Green and red mixed candles with lots of overlap. There is no trend there. This is a warning sign. Do not trade unless you have an exceptional stock that is on a path of its own, has a mind of its own, then you can come in and trade. Apart from that, as far as the overall market, there's nothing going on. If you take a look at the most prevalent market pattern that we're seeing right now, is you get a move and a compression. You get a move and then you get a compression. You get a move and then a compression. And these moves happen very, very quickly between these trading ranges. So There's your trading range. You get a move, boom, boom. Maybe a couple of days of follow through. There's your trading range. You get a breakdown, boom, boom, couple of days, and then you go back into that mode. Here you've got a trading range right in here. You get a nice little move up, boom, boom. That's it. That's all we get. A couple of days like that where we get back to back moves, and you can take advantage of them at that time. But then you have to suspect that the market is just going to trade in a range. It's waiting for news right now. We have inflation's very hot. We have rising interest rate environment. We've got slowing economic conditions. These are not the conditions that asset managers are going to dive into head first. They're going to be very, very cautious. In fact, I think this lasts the rest of the summer. They need to see that economic conditions are able to shoulder these interest rate hikes before they start coming in and progressively buying. And if in the meantime we start seeing an economic slowdown or we start getting all sorts of warnings from corporations that, hey, we're going to have to lower our guidance, that's not a good sign. Then the market is going to continue to head lower. I still do not feel that we have seen that low or that bottom that we're likely to see sometime this summer. So this is a nice move higher. We could tell from the charts that we had nice stacked green candles with very little to no overlap. Yes, this was a move that we could capitalize on, but once that move ran its course, and we could tell when it ran its course because we're instantly seeing down gaps and long red candles that told us that the move was over. Needed to focus on day trading, trim your size, trim your trade count, prepare for extremely light market conditions. It's all about market context, folks. It's not that hard to read, but it's critically important. And oftentimes I see traders, they turn on their screen and they assume that every trading day is going to be just like the previous trading day. It's not going to. You've got to take that longer term context and use it to your advantage so that you know how to approach the trading day. When you have an inside day like this, then you need to prepare for very, very choppy trading. See how long that candle was right there? This was an inside day right from the very, very beginning. That tells you we're not going to go anywhere fast. There's your high of the day. There's your low of the day established within the first 90 minutes. Once you see that and we drift back into the middle of the range, you've got to be in defensive mode. You're past the middle of the day. There's nothing going to be happening. I hope that this analysis helps you structure your trades and identify market conditions. This week I should be doing a lot more videos. I'm trying to get back on track, so I hope to have a pick of the week out for you tomorrow. If I had to look at the price action for the market right now, I might be leaning bullish, but reluctantly bullish. So we'll see what I come up with. I'm going to look for stocks that have great relative strength or weakness that could work even if faced by an adverse market move. Thanks so much for watching. Please leave your comments. See you soon.